Good morning, everyone. It is February 17th, and this is Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today. My name is Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have quite a bit that we can talk about today. And really, what we're looking at is volatility. We are seeing volatility in the markets. We're seeing it because we know we've got inflation and uh, people are trying to uh, manage assets or move money around in anticipation of a rising interest rate environment. But we've also got geopolitical things going on. The I don't know what to call it, incident. The situation between Russia and Ukraine is getting even more heated. We know some shots have been fired, and you know it's inherently dangerous to have that many hostile people in one space. Anything can trigger a war. We even heard uh, reports yesterday that Russian planes were buzzing U.S. planes and coming within 5 feet of them. You got airplanes within 5 feet of each other. The slightest miscalculation. So certainly that is causing volatility. Now, where are we seeing that volatility? We're seeing it in oil. We are going to take a look at oil. Oil is making some wild swings. Brian's even going to talk about how the volatility in oil has kicked up to double what it would normally be expected. Also seeing equities in the red this morning. And then the one surprise thing that's been going on over the last couple weeks as these tensions have heated up, and we really haven't paid a lot of attention to it, but people have been moving to safety, and gold has been going through the roof. Now, before we jump over to taking a look at the charts and analyzing all that and looking for potential trading opportunities, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. The one thing I just wanted to kind of point out before I flip it over to Brian is just take a look at what has gone on in the last couple weeks in gold. I mean, gold could not get through 1800. Every time they talked about raising interest rates, it actually dropped lower because we know raising interest rates hurts gold because it is not an asset that generates income, makes it more expensive to store it. Well, with the turmoil that's been going on, gold flirting with $1,900 an ounce. That's $1,000 per ounce move in gold. In the last couple weeks, it's just been marching higher as Russia continues to march to the Ukrainian border. So, a rather interesting uh, tidbit of information as people move to gold potentially for safety. All right, with that, Brian, let me flip it over to you and let's take a look at what's going on in the volatility in oil. We could take a look at how equities are setting up because they're all in the red. And then I don't know if you've got anything. We can go back and look at gold. It's been so long since it's been up here. We might want to take a
Mhm.
peek at
Sure.
where we might see levels in gold. We're gonna have to go back a ways.
Mhm. Yeah, I mean, so obviously the developments overnight definitely kind of throw things into a spin, but the currency market is reacting as exactly how you would expect it to. For those of you who don't know, at about 1 o'clock this morning, or not Iranian, Ukrainian armed forces fired mortar shells into this area. I don't know if it was against rebels or whatever. Thus far, Russia really hasn't done much about it. They said that there's reports of the shelling is on both sides is very alarming. So it's not like they have not sent tanks across the border or anything like that. But everybody's, you know, weeks ago, or I guess about a week ago, they made comments that the way that Russia would stage this was basically say that they had no reason, or that they had to go across because of things that happened on the Ukrainian side that the Ukrainians shot first. But he said that before. NATO just said it again. They're concerned that Russia's trying to stage a pretext for invasion. Thus far, it's like Russia has taken a very kind of low standpoint of saying it. There's been some comments of it. Looking at kind of what their the Kremlin's kind of responses are, and there's a nice little article on Forex Factory about it. And some of the things are, it's making sense. And this is kind of one of those, like, when you have the stare down, it's like the Cuban Missile Crisis. It's like, okay, your ships are facing our ships. Is something going to happen, or is everybody are we going to call your bluff and go home? Some of the things they say in here, one of the things yesterday we mentioned was that there had been no proof of there had been no kind of footage, anything of Russia pulling away. And the Kremlin says, hey, listen, it took weeks to deploy those military forces for exercises. When they're done, yeah, they'll be removed. But we just can't instantaneously go home. It says, they need time to return to their normal bases. It cannot be done in a day. They said that we have a clear timetable withdrawal for forces after the games, after the war games. Originally, before the Olympics, before this got to the level that did, they said that they were going to be conducting these games until the 19th or the 20th. So, I mean, they're almost over. That was the big, it was like, they're going to invade during the Olympics. Their games are, their stated war games were going to happen until the 20th, I believe, is what the original date was. And then they talked about, again, after the exercises, that's what we planned on. And then they say that, the Kremlin hopes people will not believe the fake reports about new possible Russian invasion date. So, I mean,
As
their
they
actions are
continue to
showing it.
stack up troops.
Yeah, I mean, so they're
Also
showing it.
to sneeze with a gun in their hand.
Yeah, I mean, the good thing is there has been weapons fired at this point, and there's not a full-blown tank rollout across the border. So we haven't seen it, but the currency market is responding how you expect it to. If you were up and looking at charts, I mean, there were 60 pip movements in most of the charts instantaneously. All the yen-based pairs. So we've seen yen strength across the board. Dollar yen you can see is moving. Pound yen, it looks like it's flat at -6, but this is the scenario where it's a bull versus a bull. The pound right now is up pretty heftily. You can see that the pound dollar is up 74. The euro pound is down 46, showing a lot of strength over there on the pound side, and that's why the pound yen. You would look at it and say, "Oh, it's flat." No, it's the yen is really getting a lot of strength right now. So it's the pound and the yen are the two strongest. The dollar Swiss also down 41. Not so much dollar weakness. It's shots were fired, so money runs towards safety, which would be the Swiss side. So currencies have been very interesting. There's been no real news this morning, the unemployment claims, but that's not really affecting it. Everything else is kind of like, all right, are they crossing? Are they not crossing? What are we doing here? And then again, there's some
that's the story of the day. I mean, that is really
And then again, comments today. Today is the first G20 meeting. We did have an FOMC yesterday as well. We're seeing some comments on that as well. Larry Summers on CNN said that the Fed is well behind the curve on inflation and should stop. Should stop. Well, let's see what he says. Should stop stimulus ASAP. This is something that a lot of people are talking about right now. Like, why are we raising interest rates while we're still doing stimulus? That this absolutely makes no sense. Like, why would you? It's like, we've never seen anything like this, and this is it makes absolutely no sense. Let's raise interest rates to hurt people, but at the same time stimulate them. Like, it's one of these type of things. So that's one of the stories today.
Well, part of that is also just slowing down the machine.
Yeah, well, I guess, yes, but they said you don't stimulate and hurt all at the same time. There's just no point to doing it. That they could have controlled this had they stopped stimulus. And again, remember, we were supposed to stop all that back in September. That's what they were calling for. And then they got one bad economic number, and it was like, no, we can't do that. We got to slow down. People like Bostic, who were all on board, and then the next day had his bipolar switch and was like, nope, I didn't mean that fast. And then we've seen inflation continue to rise faster. So, all the kind of big name experts are like, listen, you were so far behind, it's ridiculous. Again, trying to appease everybody only hurts everybody else even more in the long run. Sometimes you need that, like Todd, like as you mentioned, pulling the Band-Aid off. You kind of need that sometimes because it's a death by a million cuts at this point is what we're dealing with. So FOMC yesterday also kind of moved things around a little bit. Going into charts, again, this is not FOMC. I guess we'll start with gold, I guess. You can see FOMC occurred right where this dotted line was, and it kind of it kind of maintained and then started to pick up speed. And particularly this morning at 3 o'clock was where it really broke through that 1880 level and actually broke almost to the 1900 level as well. Their comments yesterday were basically non-existent, right? They said, yeah, we got to start doing stuff, guys. And then that was it. They mentioned no rates. They mentioned no timelines. It was like, wow, if you could have a dovish statement in the current environment, that was definitely it. And because of it, we've seen the rallies off of it. Like the fact that they mentioned nothing. Yeah, I don't know. It's one of those things that I am the loss of words. I had the same feeling about this like last year when all they wanted to talk about was transitory. I'm like, they're absolutely clueless. I don't have their degrees, but how can they think this? And so far, it's Brian 1, Fed 0. Now, the fact that they mentioned nothing, it's like, I mean, Todd, you said what? There's like an 80% certainty. It's a 0.5 right now.
It's a lock that it's a lock they're doing 50.
Right. And yet they mentioned zero about it yesterday. Nothing.
Yeah.
Nothing. They just said,
the markets
we got to start doing that.
And the markets have already priced in 50. Yeah. It's already done.
Yeah. Yeah, and that's the crazy part is it's there and they didn't mention it. So gold, people are like, you're going to not mention it? You're going to stay dovish with this? You're not going to come out and lead with it?
Everything else going on too. How far back do we got to go to see? When was gold at 1900 last? I don't even know how far back we have to go.
June.
Oh, so all
so
right.
Not even a year.
Not quite a year. Not quite a year. All right.
Yeah, not quite a year. And we're approaching. I mean, the last time we were there, I don't think I can see it on a 4. Maybe I can go back that far. Yeah, I can. Let's see. Yeah, I mean, we're in an area right now. I'll put 2 lines. Actually, let me just do horizontal lines. I mean, really, I would say anywhere in probably that area here. Yeah, I mean, we're right at a level right now where there are sellers.
Where sellers come in.
This is an area where there's sellers.
That is from 10 months ago, 9 months ago, and we've got the geopolitical environment's also changed a bit. So
yeah, I mean, you're definitely seeing the risk assets move. You're seeing dollar down a little bit. It's up a little right now. It's not doing too much, but you're seeing the cryptos are down 3-4% right now, and you're seeing gold up 1.5%. So you're seeing it go back into kind of more of the safety assets right now.
Yep.
But this is a very, very strong rally, and you can see that it really started right before FOMC and continued to push higher. Again, did they know the statement beforehand? Could be. And then again, with it driving up right now, we should see some profit taking. So I would say there's probably more short opportunities than, I wouldn't necessarily want to jump on it long now. I mean, as much as it's moved.
Right. I agree. Yeah. 1,000 points in a couple of weeks. I mean, it's kind of a.
Yeah, it's a lot very, very fast. And like I said, I would say one of the main factors is the fact that it's factored in. Everybody knows it's coming, but yet they won't say it. They're still showing a lot of weakness in wanting to control the situation. And it's, again, we're at 40-year highs, yet there's still remaining a dovish tone right now when the market's like, you're putting this in. We all know you have to. If you don't, you're totally asleep at the wheel. So I would say looking for gold shorts is probably what you want to do. And again, on a 4-hour chart, you can see we're getting to some levels. The way that I would play this is I would probably drop it down and start to look for a decent top on there. Right now, we don't have it. Remember, when we get that pullback, there are going to be people buying it at the top that are going to be, the stop losses are going to be running stops. Look for a decent top there. Look for a decent candle. Look for a push down. And just, the same, it's not a Harry Potter trade because we're not breaking through a zone. But look for the same type of confirmation. Look for some type of a top to be put in, and then look for price to kind of come down from that top. And then when it pushes up again, it kind of fails to go any higher. That's where you pull the trigger, and then you start looking for a short back to the downside. That kind of impulse correction as there's a trend change there. So I would say that's probably the best thing to do there. And I want to make sure we cover oil today too.
Yeah, let's definitely do oil because oil has been. I mean, there's a story here. This volatility is out of control.
Yeah, I mean, yesterday for the oil inventory report, the API report said that it was going to be not as quite as much of a downdraw. It was supposed to be a -1. This actually came in as a surplus as a 1.1. So again, not necessarily great for oil. And you would say that, had you used the 35-in-1 strategy, there was a short setup using a 5-minute level. It literally was about 2/3 of the way through. The number came out. It gapped past the level, which would have taken you out for your profit target, and then went straight up. So it was a nice little trade yesterday off of that. What I have marked off right now is this is where we, again, you guys can see here's a basing level. Here's a very, very strong push. There's no fib levels anywhere in sight. This is why I use supply and demand as my primary, right? A lot of basing, strong push. Here was the peak yesterday at 11 o'clock. Here was that little gap. You can see where it closed and opened. That took you out of the short trade on the 5-minute. Launches up 11 o'clock, nothing but a reversal back to the downside. So nice little run. And again, that's, this is why you got to be careful with news. Had you saw this number and said, "Oh my God, I'm shorting this number," that it's crashing. What happened was the number came out right here, and shot you up to take all your stop losses out. You have to be very, very careful about reacting after the news comes out. Getting short was the right thing to do. at a level of sellers after it took all the retail traders out. And then you had to run this thing all the way down, touching off 90, and now it's come back up again. Now, since the shots were fired this morning, UK session, it took, and I have these prices marked off, it took a $2 drop in 2 hours and then went right back up 2 hours, or $2 back in 2 hours. So we've had $4 worth of movement already today in the oil market. And it's normally most volatile in the U.S. trading session. So we haven't even gotten that yet. One of the things I pointed out at the top is the daily ATR right now for oil has broken $3 a day. $3.06 is the daily ATR right now.
That's just crazy.
Traditionally, it's at about $1.40 to $1.60. So we are double right now what the daily ATR is. So that just shows you how much volatility is stacked in. The U.S. hasn't even started yet, and we're up 2.29%. So right now, I would say, and again, with the volatility, the whips right now, let me draw some fibs and show you. I mean, what fibs are you using here? The 50 got sliced through, then it came all the way back down again, then came right back up again. And again, the 61 is held okay, but it's just literally starting to channel, but a $2 channel is quite large. So it's not even necessarily respecting those. So it's one of those things. If we can get a decent top in there and we can start finding trend, it's worth it. If not, be prepared to kind of take these swings and, again, use something. Again, Nadex is perfect. Because we have whatever you get into the trade for is your risk. That's it. You don't have to worry about it. So, this is a day-to-day where you're looking at call spreads. If you can find a knockout in close proximity.
Or knockouts. And I did drop that link in. Adam McCaden, my colleague, is going to be doing knockouts and call spreads. If you're not familiar with knockouts and call spreads, I dropped a link in. Join that webinar. He's doing a whole series. He did binary options last week. But if you're not familiar with knockouts and call spreads, I mean, knockouts in particular, you're trading the price. The price is the price. There's no premium levels in it. You're trading a Delta One product. You buy it if you think it's going up, you sell it if you think it's going down, but you've got clear, defined boundaries around it to knock you out for either locking in profits or stopping losses. And in a highly volatile market, knockouts can be an effective tool when you're trying to trade.
Yeah, in whipsaws, I personally, though, I like the call spreads. Take the premium, just because if you have this whip, in this case, had you had something here and gotten knocked out, guess what? You just needed a little bit more time, and it blew your call spread out to the downside, but the knockout would have taken you out. Remember, there's pros and cons to every single product that Nadex has.
And learn both of them.
Because there's a time and place for each. Absolutely, without a doubt. But again, I think oil is going to be a hotbed today, especially as the Ukraine situation unfolds. Also, not that we have it today, but G20 is going to talk about oil today. The reason why is because globally, the prices of energy are the highest of any of the inflation categories. They are absolutely going to talk about it. Many countries have already mentioned it before. And OPEC is over there saying, hey, listen, it's too volatile. We can't just start doing supply. It'll crash. It'll go all over the place. That's their reason why they are not producing more oil. And remember, every single day that the prices are this high, Russia is making another $200 million. Yeah. So every day that they have this volatility and it stays above 90, they are making bank. So they have no motivation whatsoever to change it right now. So
let's do, because we're running a little long today, but let's do, because equities are looking to open soft. Let's just do a quick rundown of the equities.
As you would expect.
Today.
Yeah, I mean, yesterday we were looking for FOMC to really kind of make a big move. What I said was yesterday, if they come in with a dovish statement, which I said, and again, I was wrong. I was like, I don't think there's any way they can come out with a dovish statement. Well, guess what? They proved Brian wrong. They came out with a dovish statement by saying absolutely nothing about the raise. And because of it, you see this big green candle? This big green candle was them saying absolutely nothing about it. So again, the whole rest of the world is like, I don't know what the heck they're doing. That's why we got the pop. But right where we are right now, it's kind of the same setup. I would adjust this slightly. Again, we have some basing a little bit lower. We're going to need a little bit more confirmation in it now. And again, this is what happens. I mean, it was set. It was ready to go. We had the pullback. Everything was there. And then they came out with a statement that shocked the entire world because they said nothing. But I would still say that, at this point, I would look for this probably to drop today. Unfortunately, it got a little bit choppy. It was set up perfectly until if they would have just said the 50, just one thing with the 50, just to confirm it, it would have been golden. I still think today, with everything going on, unless Russia says, hey, listen, I want to sign a peace deal that the entire world gets rid of all nuclear weapons, I don't really see how much is going to go up today. The data that we did have this morning, also negative. More people lost their jobs. Philly is finally catching up to Empire State, not as good. So, not a whole lot of positive news today. overall, I was going to say inflation is still going crazy. We got missiles flying. More people lost their jobs than they expected. So there is a lot of disappointment today. But just be careful of the bull and bear trap, especially in the ES. NQ's down a bit more, but kind of a similar scenario. It came down, it was completely primed, ready to go, and then when they said nothing, the market's like, "You're going to be dovish? You're going to be yes, thank you,"
Took off.
and that's what
Yep.
sent everything higher. Now, this one actually did go back, and there was a short here. Again, this is what I'm talking about: finding those top, finding those bases. Confirmation actually came in right here on this one. You can see it right there, came up to touch that level. So, could you have traded this parabolic retracement move? Absolutely. Absolutely. This was a textbook parabolic retracement move. I still think this one, when it comes down and starts messing with these buyers here, I think we come down to 14,265 today. Man, also similar. Why we talked about it dropping. This one had actually already hit, already had its entry, was already out of the trade before the news came in. All the news did was pop it right back up again and gave it the opportunity to get back in, and it's continued to roll back down. So it didn't make it down to 34,000, but again, you can see it about 3/4 of the way down, and then popped up and is continuing to go lower. And then Russell, mentioned Russell would have it the worst. Look at that. Look at this in the Russell. Look at this. Look at this spike. And remember, the Russell I didn't like the setup as much. Here's the spike in the Russell. One candle, biggest candle. Actually, I guess this candle over here is bigger, but it's a pretty big candle at 2 o'clock in the afternoon. And it's because they basically didn't say a single word about what the raise was going to be. It's only 1 month away. Everybody knows they're raising it, but the fact that they're hiding it still is people are like, wow, really? So again, I would say overall negative sentiment today. Watch for bear traps right off the open, because again, as it does break down below these Globex lows, there will be people that are like, wait a second, if it breaks that, we're going short, right? And that'll cause the market to spike a little bit out there. But again, I think today should be an interesting 10:30 reversal time. That's going to be my favorite time to look at it, only because with the news, war, everything else going on, there's going to be a lot of traps at the open today because people aren't going to know which way to take it. So look for bull and bear traps at the open with the Globex high and low, and then look for a 10:30 reversal when we get the
10:30.
true trend for the day.
Yeah,
So,
that's actually a really good one, because that does, just be aware of
yeah,
what's going on at 10:30 in the morning,
yeah,
Eastern, on what, where we are, and look potentially for those
yeah. I mean,
reversals.
fundamentally, we should be a down day.
And
But
we
again,
are. It's just a question of do they
geopolitical,
overdo it.
yeah, geopolitical events are always kind of throw a monkey wrench in things. So the one thing I love news, but they're the one type of news that I personally don't
Well,
like to trade in because you
it's
really
so
don't know.
unpredictable. It's so
Yeah, yeah,
unpredictable.
yep, yeah,
Because it does. It hammers the markets. But then I've also seen, oddly, when you actually go to war, a war rally, which
yeah.
is
Well, I mean, war is great for
counterintuitive.
industry. Yeah, I mean, war is great for industry. But
So,
yeah,
um,
but you got to remember, I'm risk averse.
yeah,
I
it's
love
so
news, but I don't think news is a risk thing.
yeah,
War, kind of, because you don't know what's going to happen.
you
So
don't know what's going to happen. And having been around long enough to see these situations, it can
yeah.
do anything. All right, with
Hmm.
that, because we went a little long this morning, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I each have our emails there as well. We are very accessible. If you've got any questions for us, or ideas or feedback, please, by all means, email us. We do answer our own emails. And by the way, if you like these sessions, please drop a like in there on YouTube. We do appreciate that. What did we cover today? One, gold seems to be a little bit of a safe haven the last couple weeks with all the geopolitical problems, as well as a dovish statement coming out of the Fed. See gold going from $1,800 an ounce to $1,900 an ounce. We have not seen that in about 9 months. And that's just rather interesting, because gold could not get past that 1800 range, and now that we've gone through it, it's just blasted through it. We're seeing oil volatility. Average true range in oil, usually $1.50. We're now seeing that at $3 of range. Oil is very volatile. Supply and demand challenges, along with geopolitical challenges, driving volatility in energy, particularly oil. Lastly, equities all looking to open lower this morning, and just be on your toes. Brian dropped some technical levels there in the charts today. Go back and review those. Today's going to be an interesting day. We still have tomorrow, but in the US, we do have that long weekend. We've got President's Day on Monday. So there might be a flurry of trading activity today and tomorrow going into that holiday on Monday. With that, thank you again so much for joining us. Brian and I love doing this. We get up every morning looking forward to doing this every day. Glad you are joining us. If you want, please join Adam McCaden in the at 3 hours and learn about knockouts and call spreads. I dropped that link in the chat. Otherwise, Brian and I will catch you tomorrow morning. Good luck in the markets, everyone.